Okay guys, it's Monday the 19th of August and we are on the FTSE 100. So I've just been triggered into a long position after this big bullish candle at 10:45. So as always, I will talk through the analysis, I'll talk through the trade management, and then we'll have a look at how the trade gets on also. So coming into this week, well, first of all, last week I had a down week. All part of trading, yeah. Every trader has weeks where they break even or where they lose money. It's normal, but it's very difficult to sort of get used to. You work an entire week, you get to the end of the week, and what you've done is you've paid the market. It's difficult to get used to, but it does happen. So last week, I was down by 1%, and I was coming into Friday, sort of still, thinking to myself, good setup, I can get myself back to break even. And then the FTSE, well, the London Stock Exchange, crashed. So the market didn't open until 10 a.m. So technical issues happen to us all. Okay, so coming into the start of this week, this zone here, 7172, it's kind of lining up with a resistance level on the DAX also. So the markets have kind of mirrored each other a little bit coming into today. But what I was looking at with this zone is if we break up above it, we should see an attempt up to this R3 level. Really, I'm looking at sort of 95 and higher. I would expect the market to come up and test this level or test into R3. Now, we broke straight through. We got a couple of rejections, then we broke down. So first of all, I was looking at this as potentially sitting into a double top, which would drive the market lower. So I wasn't really keen to trade into this level, which is the center of the double top. Now the market came down. It's put in a little bit of a bounce here. So then broke down again. A little bit of a bounce. Broke down again, and what have we created? A very small shoulder, head, and shoulder. The pullback here is pretty small. I mean, so it's not really an ideal head and shoulder, but it's a triple test, 1, 2, and 3. I've already got the analysis of this market potentially heading up to the 95 level to the R3 up above, and then with the signal candle, what I was kind of looking for, as I mentioned, was sitting up above this center point, because very often when you see a double top or a double bottom, the market pulls back, retests into that level, and then that's where the sellers step back in. Or if it's a double bottom, that would be where the buyers step back in. So the market's popped up. I wanted to see the market just breaking up above this level, and then with my entry, I wanted to see the market breaking up above the entry candle, which it's done. So yeah, we're going to see how we get on with this trade. I am looking / hoping for the move up to these levels. But if the market does start pausing, starts rejecting as we're coming up to these levels, I'll likely just come out a little bit earlier from the trade. Yeah, I'm always kind of looking for a little bit of evidence as to what the market is doing, looking for suggestions, what it's telling me. If it is telling me something that's going against my trade, I adapt my trade management to suit. So we'll see how we get on. What I'll also do is, as always, when the trade either gets to an area where I'm looking to get stopped to break even, or where it comes back down and I get stopped out, or where it's coming up to the profit level, I'll then go on to the higher time frame and we'll kind of talk through what it is that I am looking at. But right now, I'm just in the trade. I am looking for it to press up a little bit higher. I wouldn't be looking to do anything until we get up to at least the previous swing points. And even if we do get up there, I'll probably give it a couple of candles to see if we can break through that level. And there's nothing else to do. So what I'm going to do, as always, I'll pause the video and turn it back on if the market starts to move one way or the other. Okay, so the market has smashed up into these two swing points. All I'm going to do, stop the break even. Why? Because we are testing previous swings, 1 and 2. Where is a good rejection point if the market is going to reject, if the sellers are going to come back in. The previous swings, but also there are hopefully stops up above these levels, so the market will go stop hunting, and there'll be breakout traders up here, so the market will hopefully press up, hit some stops, get some breakout traders, and get up into the target levels. But If we just hold here, if we just start kind of drifting sideways, I will just close the trade out and take a smaller profit. Okay guys, so we are still in the trade. We've had a little bit of a drift back. It got actually very close to the break-even stop level. Now, that's kind of one of the maybe drawbacks of day trading, is that everything's so squashed together. We're dealing with such small movements that there's not really a lot of room for the market to move around in certain trades. So we got a pullback here, and I'm looking at it as though, okay, so close of this candle, open of this candle, yeah, good potential buy-in area once again for buyers. We've also got the moving average, which is just coming up to sort of scoop the price action. So it's pulling back into relatively sensible level. However, it's quite close to the break-even, but I'm not willing to not have it at break-even because we're testing into significant swings. Yeah, it's all part of trading. Came very close. We're back up and testing this level now. Still hoping for the break, but we'll see how we get on now. Okay, so we closed out the trade there around about £740. When it broke really fast. Yeah, as I've mentioned, the analysis was for the move up to the line, to the zone. And as we went over, there were going to be stops up here. They're going to be breakout traders up here. To be honest, I would have closed it out a little bit higher, but the video didn't start recording quickly enough. So yeah, really good trade, really simple trade. Came very close to the break-even level, but you know, that's the risk you take as a trader. So what we're basically looking at is the market coming down on the daily time frame, creating a big doji candle at previous support right here. We've then started to bounce. So coming into today, we had broken back up above this high of this doji candle, back up above this spike, and I was looking at this one here, this spike here, as kind of the final level of resistance before the market is then very likely going to bounce at least up into this spike right here, which is exactly where we're testing right now. Now, the reason this is kind of an area of potential resistance is if we come left, you can also see 1, 2, 3 candles pausing at that area. But above this one, there's very little until we get into this section. Okay, so that's everything for today, guys. As always, I hope that was helpful. And I hope you're all having a good trading week.